What's going on, guys? Welcome back to today's video. We're going to be diving into the topic of stagflation. A lot of you guys have been asking about this and how this is going to affect us. What is this, the history behind it, and whether or not it's something that we should actually be worried about in the near future.
The change in monetary policy is a significant enough shift to prick the bubble in tech stocks and momentum stocks, but it's not big enough to slow down inflation. So we're going to have stagflation. We're going to have a weakening economy, rising inflation, and that is a very different investment landscape than the one investors have been used to over the past 10, 20 years. The manufacturers are going to have to pass on those higher costs to their customers because they have to operate at a profit.
Just for our financial education bit for today, stagflation is when there's high inflation during a recession, which can lead to some other very serious economic issues like wide-scale unemployment and all-around bankruptcy for many Americans. But don't worry, guys, I got you covered. In this video, we're going to break down the causes of stagflation as well as giving you my opinion on this particular matter. Now, I'm telling you this now because I'm predicting that there is going to be a lot of stagflation in the media and in the coming weeks. So I thought I would give everybody a heads up already. But don't worry, after watching this video, you're going to be ahead of the curve and better equipped to educate yourself and others on what's going on. But first, let me hear what you guys think. Do you feel like the situation in the United States is actually getting worse and worse by the day? Drop a quick comment, yes or no, down below. Some of the people that I've been talking to, they still remember 1974 and 1975. They're telling me how scary it was back then. Everyone was holding their breath to see if the country would go into a depression. We didn't, but there was always the thought that it was a close escape. Now, with the mess that we're still in after the pandemic, plus the greedy companies and their investors, things may end up worse. So yeah, let's go ahead and jump right into the history plus the potential future of stagflation. The math checks out, guys. This is a video you do not want to miss. Also, for the best way to invest in gold, there's a link in the description down below. And if you feel that gold is too expensive right now, silver may be a better option for you. The link for the best way to invest in silver is down below in the description of this video as well. All right, guys, let's start with this one, right? So when we talk about stagflation, there are three things that are happening. You got economic stagflation, high inflation, and we're also having rising unemployment. Now, economic stagnation doesn't necessarily mean a recession, which is basically 2 consecutive quarters of negative GDP plus a few other things. But it really means that the economy is getting worse. And obviously this is not good news because prices are rising quickly and unemployment's also going up. Inflation has lowered a little bit, as you can see in the headlines every day, but it's staying sticky and it'll probably be remaining sticky in the 4.5% to 5% range. And this has a lot to do with corporate greed, and that is very prevalent in our society. Have you guys heard these CEOs talk? They say, hey, things are so bad that we have to do massive layoffs, but to our investors, don't worry about it because profits are still way up. The Fed is probably going to raise interest rates by another 1/4 point in their May meeting, and then maybe they'll pause at least until the end of the year. I don't know about them lowering the Fed interest rate anytime soon. It may take a while, even if market investors keep trying to believe otherwise. So here in the United States, we've been through stagflation twice before in 1974 and 1975 and 1978 and 82. So it's nothing new, but it was definitely a double whammy. Now, as the economy slows down and people lose their jobs, the cost of daily living expenses continues to shoot up. And that's not all. Investments see lower returns too. In fact, during the stagflation episode of 74, the S&P 500 fell by 40%, and the US Treasuries and government bonds gave negative returns when adjusted for inflation. So I want to clarify the difference between stagflation, inflation, and a recession. So inflation is when prices are rising, but the economy is growing and unemployment is falling. During a recession, the economy is hurting and the unemployment is rising, but there's no high inflation. Now, stagflation is the worst of both worlds. It's when the economy is slowing down, people are losing their jobs, and prices are rising. All right, so now let's talk about why there could be inflation during stagflation, okay? So it could be due to supply shocks, like something going wrong in a supply chain or deglobalization, but it could also be due to bad monetary or fiscal policies. So in stagflation, the economy is weakening, causing downward pressure on prices. But if we have bad monetary or fiscal policies, that can overpower the recessionary effects and keep inflation high. Now, the big question is, are we headed towards stagflation? Some people are saying no, like Nobel economist Paul Krugman, who thinks that inflation has fallen enough without any rise in unemployment. But others are saying yes, like those who point out silver outperforming gold and long bonds outperforming equities as a warning sign. My personal prediction? History won't repeat itself exactly, but it'll probably rhyme. And we have high inflation right now. and the Federal Reserve is trying to bring it down by raising interest rates. But with the banking turmoil causing financial instability, the Fed can't be as aggressive with their interest rate policy. So more than likely, they're going to have to lower their peak interest rate plans and shorten the duration of higher interest rates. Not anytime soon, mind you. Sometime early 2024, maybe? What do you guys think? Now, what would really be scary is the US dollar losing the reserve currency status, meaning that the world will not rely on the US dollar as their default currency for the globe. Saudi Arabia preparing to sell oil in other currencies would probably be the initial downturn and the cause of yet another round of huge inflationary pressures. This could ultimately knock the US dollar off of its pedestal. We got to watch out for this. Basically, if stagflation hits, regular Americans are going to have a very bad time. Let's go ahead and break it down here. Higher prices. All right, so stagflation means that prices of goods and services will be increasing, but the economy will not be growing. And so this means that people will end up spending more money to buy the same things that they used to buy. From filling up your car to paying at checkout in the grocery stores, you're going to have to reach deeper into your wallet just to keep up with what you're used to. Couple that with higher interest rates, as we talked about earlier, the Fed might have to raise interest rates to combat inflation. And so that would mean that borrowing money would become more expensive. For regular Americans, this means bigger credit card bills and not being able to afford a new house or a car or to finance other big purchases for that matter. Overall, it's really that lower purchasing power. Because prices are going to be going up, wages aren't. Regular Americans will have less purchasing power. That means that the little that we have is just going to get smaller. A side hustle is definitely a good idea right now because with stagflation comes higher unemployment. In a stagflation scenario, businesses are not able to keep up with the rising cost of goods and services. And so that leads to layoffs or businesses not hiring as many people as they used to. That would mean more competition for fewer jobs, which would drive wages down even further. By earning some extra cash on the side, you can supplement your income streams this 2023, and that would help to cover with higher prices that you're seeing in the grocery store, at the gas pump, or even for utility bills. Plus, a side hustle can provide a bit of cushion if you end up losing your main job, which is always a possibility, especially in a shaky economy. Now, there's all kinds of side hustles out there, from dog walking to affiliate marketing, online businesses, house cleaning services, freelance writing, jumping on Fiverr, Upwork, and other platforms to land freelance jobs and opportunities. Now, the key is to find something that you're good at and something that can fit into your schedule without causing too much stress. Now, it might take some trial and error to find the right fit, but once you do, your side hustle could be a valuable source of income and peace of mind. Heck, your side hustle could end up replacing your main job. Plus, I've heard a lot of people making it really big that way. It's really not a bad idea to consider investing in gold, silver, and other precious metals either. This is because these metals are often viewed as a safe haven for investors during tough economic times. They're a nice hedge against inflation. And when the value of the dollar is low, gold and other precious metals like silver, platinum, they tend to hold their value or even increase in value. And so this can be very, very beneficial for investors who want to protect their assets and potentially earn a little bit of profit and not get wiped out. Now, of course, for the best way to invest in gold or to invest in silver, there is a link down in the description down below this video. Now, I know that buying gold bars or silver coins isn't necessarily feasible for everyone. I know that, but there are ways that you can catch a ride when gold prices start going up. Even if you have low income or on a fixed income, start small. The key though is to start. Now, you might want to even start considering investing in a gold ETF or other similar investment products. And I've seen gold ETFs starting for like as little as $10 a share. You can find these on all sorts of investment platforms like E-Trade, TD Ameritrade, M1 Finance, Robinhood, Webull, Vanguard, Fidelity, you name it. These are investment funds that allow you to invest in gold or other precious metals without actually having to buy or store the physical metal and have to worry about possibly getting robbed or something crazy like that. Now, another option is to invest in the stocks of companies that are involved in the mining and the production of precious metals. This allows you to indirectly invest in precious metals and the potential profit that their increased value will be during times of inflation. Now, of course, the catch is that there are some other factors to consider when it comes to mining companies, like labor disputes, environmental regulations, or other factors that could possibly negatively impact your profitability. Plus, there's the potential for mismanagement, fraud, or other unforeseen events that can lead to a significant decline in the company's stock price. But generally speaking, if you're investing in ETFs, there's so many different companies that are in the ETF itself, also known as an exchange traded fund. That's what an ETF is. Generally, you'll probably, in more times than not, you'll be sheltered. But always do your homework, always do your research first. None of this is financial advice. Now, it is important to research the management team, the financial statements, and other factors that may be needed before investing in any mining company or any company for that matter. And so this is why many investors choose to invest in exchange traded funds, ETFs, that track the price of gold or precious metals rather than the individual mining companies themselves. And so these ETFs, many of them pay dividends. They offer exposure to underlying commodities, which is gold and other precious metals, without the added risk of investing in individual companies. Now, of course, it is important to note that investing in any kind of asset, including gold and other precious metals, it definitely carries some degree of risk. So before investing, it is always important to do your own due diligence, do your research, consult with a financial advisor. I'm not a financial advisor, and always consider your personal financial situation and your investment goals. So yeah, I think you guys get the idea. Stagflation can definitely be really bad. So, it would be better if you prepare yourself financially for the worst. If you prepare for the worst and we get the best, well, you'll be thousands of footsteps ahead. Get a side hustle to get some extra income going. And then when you can, check out investing in the safe haven assets like gold, maybe even real estate. You guys know I'm right here if you need any help, if you have any questions, additional insights on the topics. The comment section is wide open if you guys want me to dive deeper into these topics. But anyway, I want to thank you guys so much for tuning in for today's video about stagflation, how it could affect regular Americans, the basics of stagflation, and how it can impact your financial situation, and some potential strategies to help you navigate through these uncertain times and actually come out on top. So remember guys, always do your own research and consult with a financial advisor before making any investment decisions. If you guys found this video helpful, please give it a thumbs up and also consider subscribing to the channel for more information and content like this one. Please be kind to one another, and I'll see you guys on the next one.